David Rumbens, partner at Deloitte Access Economics, joins us live this morning. You've got a report that might cause a few issues for the government this morning as Parliament resumes. David, the problems in the economy potentially homegrown. Is that verbling you, or what's the story?
Yeah, hi Laura. It's the economy is in a weak patch, as we know. An interesting thing is that even though the global economy's been slowing, it's actually delivered some good news for Australia in that we've had higher commodity prices, and that's fed through to higher mining company profits and higher returns to the federal government through the budget. On the other hand, the problems that we're seeing have been mainly due to the weaker domestic side, weaker consumer spending and weaker housing.
So weak, David, is that where you're leaving it? No more than that?
Weak for now. It's, you know, there is some stimulus in the system, so there is some cause for optimism. The Reserve Bank has cut rates 3 times now. You know, we've got tax cuts that will work through. We're starting to see, you know, at least some interest from business in investing. You know, business investment does need to lift. In the mining sector, there is some interest. So there is some cause to think that the economy will improve somewhat over the next year.
What is behind the weakness in our economy, though? Is it the ongoing trade war between the US and China, or some of the problems of our own making?
Yeah, look, it's more been of our own making. We've gone through a cyclical housing downturn. You know, house prices were too high in Sydney and Melbourne. They've fallen back, and housing investment came back with it. You know, consumer spending has been weak. So those factors have been a real drag on the economy. And so it's been mainly domestic. The trade war, there's lots of international concerns. There's lots of things to worry about. So far, they haven't affected Australia's economy too badly.
Yes, so far being the operative words there, David. I mean, there are so many international headwinds. Obviously, what's going on in the Middle East at the moment is major cause for concern, and things may well escalate even further in the coming days and the coming weeks. You've got problems in Europe with Brexit, and you've also got the issues out of the United States with its trade war in China. You know, it all seems fairly significant, and I guess it's, and you're the expert here, but is it creating this kind of perfect storm with weak problems here? We're not spending, and you've also got these international headwinds as well.
Look, the main problem that it's creating is that business is not investing. So business is saying, you know, all these problems, let's hold off, let's see how it plays out, let's not invest, or let's not hire additional people. And that causes us you know, problems now, and it means that it's constraining our ability to grow going forward. Look, it's going to be an interesting week, though. You know, it's the week where, you know, we may get, you know, something happening on Brexit. We've got the Brexit deadline at the end of the week. You know, we've come off the weekend with a mini truce in the US-China trade war, so that may give some cause for you know, at least markets to start the week well.
Okay, finally, Josh Frydenberg tells us the fundamentals are strong in our economy. Is he right?
Look, the fundamentals are working for Josh because the revenue's coming in. He's working with a balanced budget from last year, and that's partly because, you know, company profits have been good.
Well, it's good for the budget. Is it good for the economy, though?
Yeah, look, it's not as good for the economy. The economy is growing, but you know, it's weak growth. It's growing at about the rate of population growth. So you know, not strong, but you know, some signs we can get better from here.